First off, I want to thank you, Tyler, for moderating that and the panel participating. We're going to move on to our small group carrier panel. As part of our small group carrier panel today, we have representatives from Anthem, Harvard, and United. We'll be contributing to the discussion about the small group marketplace challenges and possible approaches. This panel is going to be moderated by DJ Bettencourt, the Deputy Commissioner here at the Department of Insurance. So I'm going to turn it over to you, DJ.
Thank you, Commissioner. Good morning, everybody. A few months ago, when Tyler had raised the idea of a second panel for this particular hearing to discuss the small group market, the Commissioner and I were immediate to embrace the idea. We were very excited about it. There's been a lot of considerable attention paid both in Concord and in Washington to the dynamics and unfolding proposals to stabilize, strengthen, and expand the individual market. However, in my view, more attention needs to be paid to the dynamics and the challenges that are going on in the small group market. And so, as the Commissioner said in his remarks, we know that there are challenges in those markets and unique dynamics that we need to understand. So joining us today to help us with that and help us understand what may be coming in the future, not only what's happening today, is Maria Proulx, representing Anthem, Kathryn Skouteris, representing Harvard Pilgrim, and Caitlin McCormick, representing Tufts and United. I'd like to start the conversation this morning around the current dynamics facing this particular market. What coverage arrangements are your traditional small group products competing with? Would your organizations consider any of these options good business models or an area worth investing product development resources? And to start that conversation, I will begin with Maria.
Sure, thanks, DJ. So I would say with regard to competition, I'm not sure if I would use, that word. I'd say, some of the other funding arrangements that are available in the market are arrangements such as PEOs, associations, MIWAs, those types of entities that pool together many small group employers, some, larger small groups. And, we don't really consider those competition because we work with them. So we understand that certain employers make decisions, that PEOs are really which are professional employer organizations, are something that small employers consider because they want to have access to administrative services outside of just healthcare. So they want their payroll done, they want all of those services provided. And so they make decisions to go into arrangements like PEOs. And so we certainly at Anthem support those arrangements. But those are, I would say, predominantly are the ones. I think the newest on the block are the availability of the Icra, which is the availability to for small employers to be able to provide money for their employees to go off and buy insurance on the individual through the individual market, tax-free. Those are obviously available today, have been now for a couple of years. I would say from an Anthem perspective, we've seen nationally a little bit of uptick with the Icra availability, but certainly in New Hampshire, we haven't. We've had questions about whether Anthem supports from an administrative perspective the Icra, which we do not today, but we haven't actually seen small employers dumping coverage out of their employer-sponsored coverage to provide those funds to their employees to go and purchase Icras. So that's what those are the categories I would say.
Thank you, Maria. Kathryn.
Thanks, DJ. The other arrangement are really sort of self-insured or captive arrangements that I would just add to the sort of list of arrangements. But similar to Anthem, we haven't seen a lot of momentum in the New Hampshire market for these arrangements. So therefore, we're not seeing a lot of competition for those arrangements in the small group market. But I also think we need to be concerned that these coverage arrangements are likely to reduce the size of the existing New Hampshire fully insured small group market. We know when small groups, when they leave the fully insured market for these other arrangements, those tend to be the healthier groups, which leaves the remaining groups less, more expensive. And it leads to the instability of that market. New Hampshire's a small state, and I think we need to do whatever we can to prevent shrinking of the small group market pool, because the last thing we want to see is this pool shrink to the point where small employers can't get coverage because the premiums are too high. We think it's important to maintain the size of the small group pool. The larger the pool, the more stable the market will be.
Very good. Thank you, Kathryn. And we're going to get into a discussion a little bit later on this morning as to what policy considerations perhaps the state needs to consider to accomplish the goals that you've highlighted there. But on this question, I wanted to throw it over to Caitlin.
Thank you. And it's nice to be with you all this morning. I apologize that I wasn't able to hop on for the earlier session. So in addition to what Maria and Kathryn mentioned, certainly our small group products compete with those of our competitors. And I would say, the largest sort of competition we have is the individual market, right? Employers choosing to provide a stipend and allow employees to go and purchase their own insurance. We haven't seen that be significant. I think if you look at the statewide membership in New Hampshire, the small group market declined by about 2,700 members in 2020, and the statewide individual membership was up approximately 3,000 members. So indicating, there's some shift, but it's not all that significant. Certainly in other markets, we have seen level funding be an opportunity that many clients of this size have taken advantage of, but that, to date hasn't been an opportunity in New Hampshire. So something that, we continue to look at. But really our focus is on, continuing to offer strong employer sponsored plans because we think that really gives New Hampshire businesses the most opportunity to attract and retain strong talent.
Very good. Thank you. Before we move on from this topic, I did want to highlight a question that had come in the member of the public would like to know how you're able to differentiate between losing a small group policy to another carrier versus losing it to move to Icra.
From an Anthem perspective, we would really only know if we were told. So either the employer directly lets us know that that's the action they're taking, or the broker lets us know that the employer is taking that action.
That's right.
Yeah, agreed.
Very good. I appreciate that and appreciate the question from a member of the public. Moving on to our second question, I'd like to focus on cost and affordability. Affordability, as I'm sure you know, is often named as the major challenge for small employers. Is there anything unique about this market vis-a-vis other markets that add costs or makes coverage in this market less affordable? And we'll start with Kathryn for this one.
So for this market, I think we need to think about its size to make sure it maintains its affordability. New Hampshire's done a really good job keeping this small group fully insured market intact. As Caitlin said, there's been some shift in size, but the other New England states that we provide health insurance options to, they haven't been as successful maintaining the size of their small group market. Connecticut, the small group market has been reduced by almost 55,000 lives since 2016, which is an average drop of 10% per year. Those level funded products are options there. And so you can see, that is one area where we're seeing it impact the size of the small group market. Similarly in Maine, we've seen that a shrinking small group market. So that's really something that we need to be concerned about as far as affordability in this area is concerned.
Thank you so much. Caitlin.
Thanks. So affordability is certainly something, we're focused on every single day. It's one of our main agenda items. And a couple of things that we see specifically in New Hampshire that can be barriers to affordability are first, the demographics of the population. So according to the 2019 consensus, Maine is actually the only state that has an older median age than New Hampshire. So that aging population, really trends to drive up utilization and thus medical costs, resulting in that, the natural outcome, obviously, of higher risk population than in some other markets in the U.S. And then provider competition, I think, is another unique challenge in New Hampshire. Certainly not limited to New Hampshire, but just given the fewer number of providers and the rural nature of much of the state. Costs are driven partially by the fact that providers have to pay people more to retain qualified healthcare professionals in New Hampshire, right? Just due to the geography and the rural nature. And then, things like mergers and acquisitions between the larger hospital systems certainly further reduce our negotiation powers as we, work with providers to strike competitive contracts. So those are a couple of the things that I think specifically, provide affordability challenges in New Hampshire.
Thank you. Maria.
Sure. So I'd probably just say ditto to many of the things that have already been said. But then just sort of to your very specific question, is there something in small group that's different that drives the cost to be higher than maybe the individual market or the large group market? And, there I would just say, I think it's about the underlying cost of healthcare across all segments, right? And that's a problem for individual, small group, and large group. We don't see different administrative overhead between servicing small group, individual, large group, right? Or our costs are relatively the same from an administrative perspective, a broker perspective, a marketing perspective. For us, it's about the underlying costs, and that's a problem across all segments. So we really don't see that any sort of different structure results in the costs in small group being higher than individual or large group.
Thank you very much. So as I had forecasted before, I'd like to get into a discussion about what some of the policy opportunities there may be. A couple of you have raised the challenges really of adverse selection in this particular market. So from a policy perspective, are there legislative or regulatory actions that in your view New Hampshire could consider that could lead to greater stability and lower costs in this market? And Caitlin, if you could kick that one off, that would be wonderful.
Sure, thanks. Unfortunately, there's really no simple solution for this. I think the evidence shows that merging into a single risk pool, as some other markets have done, has led to higher costs for small business owners in the markets, making it even more challenging for employers to afford insurance, which is certainly, not a position we'd want to put employers in. Of course, attracting a younger, healthier population to the state would be a clear solution, but there's obviously no way necessarily to do that. So, we've always appreciated that the department has had a very open line of communication around initiatives that lend themselves to cost control. You guys have been a great partner in that regard. It's something that we're very passionate about, controlling the cost and really making sure that healthcare is affordable for everyone. So, it's a difficult question and not one I think we have a singular answer for, but something we continue to work towards every day.
Thank you. Maria.
Sure. So, generally agree with Caitlin's comments. I think from our perspective, first off, I think the state has moved in this space, actually probably before most states years ago, where you brought forth regulation around stop loss attachment points. And I think as a result of those obviously have prevented some of those alternative funding arrangements that we talked about earlier in the day. So I think we actually have been proactive in this space in New Hampshire and has allowed us to keep that risk pool more whole. I think from our perspective, very similar to Caitlin, it concerns us with discussions about merging the individual and small group markets, given what we've seen that do in other markets. And I think if we look at the underlying risk scores between the two populations, small group and individual, you're going to find that higher risk score in the individual population, which ultimately means, small groups bearing more of the cost and costs going up. And we know that small groups are already struggling to maintain coverage. We've seen that slight decrease that we talked about, that Jen talked about in her analysis earlier this morning. And, although slight, if that were to happen and the markets were to merge, we would be very concerned that you'd see much more degradation across that small group book of business.
Kathryn?
You know, I would just sort of harken back to some of the points that I made earlier about increasing stability in this market. And to increase stability would mean to prohibit further fracturing of the size of the pool, right? So that's one option, which would be prohibiting stop loss for small group employers. You know, the cost to self-insure is only lower if there's good risk in the pool. If the pool size becomes fractured, right, that's going to leave potentially some bad risk in the fully insured market, which is going to cause instability, higher rates, etc. So, slanting towards keeping the pool as intact as possible are options for legislative and regulatory actions. You know, on the other end of the spectrum is the merging of markets, right, which I think was raised also. And I just think merging individual and small group, they're too different in how subsidies work, how where additional dollars are coming from. The theory of inelastic demand works here, right? So the more you take from one side, the more you got to get it from somewhere else. And I think it's just being mindful of how all of that plays out in these markets that we just need to pay attention to.
Yeah, DJ, I would just add one thing. I think a move that we made in New Hampshire around, the only other thing we talk about sometimes, internally at Anthem is around the FTE counting rules, right? And obviously New Hampshire moved to count employees through the federal process. Whereas prior to implementing that, we were looking at number of eligibles. And I think sometimes when you use that FTE federal counting process, it results in very tiny groups being experience rated because there's actually only 3 or 4 or 5 employees who are actually eligible for the benefit plan. But because of how you have to count, they trip over into that large group space. So that would be the only thing. And of course, you'd have to look at the pros and the cons, right? And how many are impacted. But that would be the only thing that we talk about sometimes to say, was that the right move for New Hampshire? Or should we have held steady and continued to count eligibles and not FTE?
Thank you. Before we move on from this, there has been the suggestion that the federal government should look at reforming ERISA for the self-insured option. And of course, there are pros and cons to that. If you restrict that, there's the potential that that a product can no longer be affordable. On the other hand, you're limiting choice. What is your perspective on whether the Fed should consider some sort of reform to ERISA and the self-insured market? And I'll throw that out to anyone who would like to take that.
I would just reflect back on my prior comment, right? You have to look at the costs and the benefits and sort of where the cost is coming from. Taking cost from one area is pushing it into another. And those are really part of the policy decisions. When you think about these sorts of changes, there's no magic wand, but things need to be paid for somehow, right? So in the larger economic analysis, we just need to be mindful of if we're saving some expenses in one area, that's the intended policy move, but we are obviously shifting some costs to another area.
Anything anyone else would like to share on that point?
I mean, I would say, I agree. And I think, it all depends what they're considering. When you touch one thing, it always has impacts across the board generally in this industry and what we do. So it would really, depend on what type of proposals they're looking at.
Thank you. I know that each of you at different points during the discussion today has touched upon this a little bit, but I wanted to directly ask, are there economic or policy developments that are leading small employers to the individual market? And Maria, I'll start with you again.
I would say, as I said earlier, the onset of the Icra, and being allowed to, use tax-free dollars to help their employees go buy individual coverage. I think, I'm actually glad you asked this, because I was thinking about this during the Gorman presentation, where Gorman talked about what they felt caused the shift between small group and individual in New Hampshire. And I think they talked about the enhanced premium subsidies and a 1332 waiver. I think the other reality is COVID. We saw that small employers, during COVID over the last year had to drop coverage, either because, their businesses were temporarily shut down, or for, they simply just couldn't afford it. They weren't making any money, therefore they could not provide coverage. So, I think that in and of itself also resulted in some small employers not offering coverage through COVID or reduced coverage. And that then, of course, put, more individuals into that individual market. But I think the good news is that we're starting to see that come back. And we're starting to see the small employers come back, get coverage. We're starting to see, employers that were large pre-COVID that had dropped into small start to grow again from an employee perspective and move back into large. So, I think between, the availability of the Icra, the enhanced subsidies that are available through the individual market, and even just the reality of COVID, that sort of, pushed some of our small group into that individual market over the last year or so.
Kathryn, thoughts?
The economy's certainly been impacted by the pandemic. As Maria said, COVID. We've seen employer groups rise and fall as the pandemic has kind of moved along here, and that's going to be from not only retaining employees, right, and vacancies, and maintaining the size of their actual employee group, as well as the cost of care. And I think as far as cost is concerned, that gets back to our discussion about stabilizing this market and keeping it strong. But I think also being mindful of other options for relief during this period. When things were just hitting with the pandemic, we provided premium credits, allowed these fully insured groups to request premium deferment, allowing fertile employees to stay on the plan and remain on the employee benefits. Those kinds of things helped get through the state of emergency. But I think stabilizing the market would go a long way to further impact the cost for these small employers.
Thank you. Caitlin.
Yeah, so I definitely agree with what Kathryn and Maria had shared about, how the job market has been impacted by COVID, and certainly, small group employers and the difficulties that they have faced over the last, 18 months to 24 months. One question I think to ask is whether the current competitive job market will sort of have the inverse effect. And instead of seeing people continue maybe to move away from the small group plans as businesses struggle, will we see, more people moving to employer-sponsored plans as a way for employers to be competitive in what we're seeing as a really tight labor market, and everyone really focusing on how to attract and retain strong talent in this market. So we're interested to see how that unfolds in the coming year, and maintain our position that we're really supportive of employer-sponsored plans and any economic and policy developments that support that philosophy.
Yeah, thank you, Caitlin. And, I think to that point, I think a lot of states are going to see how that plays out once the federal public health emergency goes away and Medicaid re-eligibility is done once again. Where did those people go? Those people who were impacted by the pandemic and had to go the route of Medicaid. Did they pick back up with a employer-sponsored plan? Did they go to the individual market? Where did they go, and how did that all shake out? So I think there's going to be a real moment to be able to assess that within the coming year, as you've identified. As part of this conversation, I think all of you have touched upon the importance of the relationship between the small group market to the individual market. And I think for many of us, we appreciate the fact that there needs to be a balance there. And as a result of the pandemic, there has been a lot of emphasis on the individual market in making that more affordable, enticing more folks into the individual market. At what point, though, does it become too much? At what point are you potentially over-incentivizing the individual market at the expense of the small group market? And again, I'll throw that out to whoever would like to tackle it first.
So I'm going to be a broken record here and go back to my comments about the size of the small group market, right? I mean, 60,000 members, it's not incredibly large compared to other state small group market sizes. And I think also between the individual market and the options for small group employers, it's really difficult to compare pricing plan to plan because the individual market plans tend to be leaner, right, than small group plans. And then, you know, it may be less expensive for the individual, but the individual plan may have less coverage, right? So, and the costs are different. So I just don't think there's a magic wand to think through this. You know, the market is subsidized in the individual market. And then some of that's coming from the federal government or likewise. So I think thinking through the sort of impact of moving folks to the individual market, we need to be thinking about what that's going to do to the existing size of the small group market.
Anyone else with thoughts to share?
Yeah, I think, you know, to Kathryn's point, when you think about issues related to rating and selection in the small group market, you know, historically coverage over time becomes more costly in the small group market than it does in the individual market for a variety of reasons. So, you know, I think, you know, we maintain that focus that getting people onto employer sponsored plans means more people with insurance. And so, you know, we feel strongly that that's a direction we want to continue to push people in.
Very good. So Maria brought it up earlier, and I wanted to get a sense if you're all in agreement. Kathryn, I think you were as well. The idea of blending the individual and the small group market does not seem to be a pathway that you think would be beneficial. Expand on that a little bit more. What have you seen in states that have gone down that path?
So I would just offer that, you know, that's something for the state of New Hampshire to think about as it relates to the federal subsidies and how those are driving the individual market for purposes of New Hampshire. Yes, we know we have other programs in place for the individual market in New Hampshire, the 1332 waiver, you know, and those elements that have been successful in helping lower costs in the individual market. But then you think about things like the cost sharing reduction subsidies and the advanced premium tax credits. And, you know, I think seeing the data on how those elements of the federal government's subsidy programs impact that market, right, as opposed to the small group market, you know, and then, you know, the complexities of that. So I think obviously we want to make sure we are keeping costs down, we're maintaining affordability, but then we also don't want to push some of those costs onto the large group market, right? Like some of those other New Hampshire programs, because that's going to just influence cost in that area as well. So, you know, back to my sort of inelastic demand, right? Who's paying for the reductions and what areas are those going to come from? It's really a big policy discussion.
Very good. Maria or Caitlin?
Yeah, I mean, I'd agree. And, you know, as I said before, I think, you know, we've looked at across this. Anthem is obviously in 14 commercial markets, some that have done this, some that haven't. And, you know, there was a recent study, you know, that Cover California did about this, about looking at the risk profile. And the study found that, you know, small group enrollees had 15 to 20% lower risk scores than individual enrollees. employees. And, some of the reasons are pretty basic. Those who get access to coverage through small employers are by definition actively at work individuals versus in the individual market. I mean, I never actually thought about that until I read the study. It's so basic. But I also think in the small group market, we have employees receiving contributions from their employers. We also have minimum participation rates, which prevent adverse selection, which you obviously don't have in the individual market. And, I agree with Kathryn that, you can't compare, the small group and individual premium and just say, oh, one's cheaper than the other. You have to look at what is being offered. And I think what is offered in the individual market by way of benefit plan design, by way of network offering, is in large part very different, especially in New Hampshire, when you look across. So comparing, you're not really comparing apples to apples. And I think you have to consider that if you then take those two things and try to blend them together, that impact it's going to have on, and you'll see the small group employer market shoulder much of that burden.
Caitlin, you in agreement with all of that?
Yeah, no, I think that was well said. I do think it's a hard comparison to make without, accounting for all the factors.
Very good. So getting back to a point made earlier in the discussion, we've talked about some of these alternative arrangements that potentially draw people away from the small group market. What kind of small employers, though, would be better off considering an alternative coverage arrangement, which could very well include directing people toward the individual market? And again, I'll throw that out to whoever would like to tackle it first.
I'll be slightly controversial as opposed to some of my other friends on this panel and say, we think small employers are best served by remaining in the small group market. We think that's going to maintain the size of the pool, which is going to keep it stable, which is going to make for predictable costs and expenses, which we know small employers need. And also, while some individuals may get a lower rate by purchasing an individual plan because of federal subsidies, not all of them will. And I think, predicting risk in health insurance as a small employer is difficult. So we would say, it may look attractive to go into one of these other arrangements, but then the next year, for example, there's a pandemic and you're not clear on how it's going to impact the health of your employees. New Hampshire's done a really good job keeping small groups in the fully insured small group market, which keeps the market size large enough. And again, we just have this small state, so I would really pitch for keeping them in this small group market and keeping the market intact.
Thank you, Kathryn. Caitlin?
Yeah, and maybe not as controversial as Kathryn might think, because we too feel very strongly about the value that employer-sponsored healthcare plans bring to the table, and really our obligation to help New Hampshire residents live their healthiest life. We're always keeping our eye towards affordability, deploying strategies that help keep premium costs down, and I think that's our obligation as insurance providers, allowing New Hampshire businesses to offer benefit packages that remain valuable for their employees while being affordable, during difficult economic times. I think I mentioned earlier, we're in the midst of such a competitive talent market right now. And we really think that pushing people to the individual market could hurt companies' ability to attract and retain talent, which obviously has other economic downstream impacts. So, our point of view is definitely that the keeping the small group market intact and providing options that allow employers to continue to provide those sponsored plans is the way to go.
Maria?
Yeah, I agree. And I think that, from our perspective, there just is no typical small employer or typical employee. I think every small employer is different. Every employee is different. And I think small employers make those decisions based on their own employee population. And I think, just picking up on something Caitlin said, I think in that small group segment, we see the highest levels of paternalism still. I think we've talked a lot about, the COVID impact and the impact of the economy with the slight decrease. But I think we have to look at the reverse as well. Look at how many small employers maintained coverage through COVID, despite what was going on in their business and whether they were even operating at a full capacity. So I think we see that this is a market where employers want to provide coverage. These are very small, in large part, employers, maybe 10 employees. They all know each other. They know each other's families. And so the owners of these companies feel a need to not only just attract talent, but there's just a level of care and thought that goes into it when the employer is that small.
Thank you very much. Appreciate that. We are coming up to the conclusion of this particular panel, but before I let you all off the hook, one final question. As each of you knows, you're in contact with this department on a regular basis. We enjoy our biweekly meetings with you all. And during those meetings, you obviously receive a lot of feedback from us, but I wanted to take this opportunity to get some feedback from you. What do we as regulators need to be aware of? What do we need to anticipate? What do we need to consider as it pertains to the small group market in the next year to 5 years?
I would just offer that, having this small group panel discussion, I think was important to focus in on this market, to think about what are the pros and cons, to sort of thinking through whether the market should be, combined, whether it should be maintained for stability, and shifting focus. The insurance department has done such a great job with the individual market, rightly so, because of sort of the desire to keep affordability at play for individuals in New Hampshire, that I think shifting gears to the small group market is important. And so, anything we can do to help provide insights and information is certainly something we want to do.
Maria?
Sure. I think obviously, keeping an eye on what's going on at the federal level, is of the utmost importance. And I think one of the things we've done well in New Hampshire for years and years, led by the department, is really what makes sense for New Hampshire and what doesn't. Every state is different and every market dynamic is different. And I think some things that maybe work in bigger states, don't work here with smaller pools. And I think one thing that sort of nags at us, and I think Caitlin mentioned this, and we talk a lot about it, is just the aging population in New Hampshire, and how over the next few years, I think they're predicting Maine may be #1, but they think New Hampshire will overtake Maine very soon for our population. We see less and less young families moving in, and more retirees, moving, less and less new families moving into the state, but we see more and more retirees moving into the state. And so I think that aging population is going to have a huge impact on our risk pools across the board. And so really working outside of sort of maybe the very strict regulatory environment, and thinking about what are the things we should be doing as a state to encourage younger families, younger individuals to move into the state to help us overall.
That's a great point, Maria. I think you're right. And from a policy perspective, I think the first answer to that question is housing. And then they can take it from there. Caitlin.
Yeah, thank you. So we have really appreciated the open lines of communication with the department, especially as we've gone through, our acquisition of the Tufts Health Freedom business. We've been happy to have, this strong relationship with you all. And I think that, just continuing that dialogue, especially as we bring affordability initiatives to bear and run those things by you, we appreciate that open mind and kind of your shared passion for keeping healthcare affordable for New Hampshire businesses and residents. So I think really it's venues like this, but also those meetings that we have periodically to talk about some of those initiatives, we continue to appreciate your support on.
Well, thank you. We've got 2 minutes left, so in about 30 seconds each, if you're so inclined, we had a question come in from Lucy Hodder, who asks, can we talk about how we can partner with other providers, communities, employers to reduce the underlying cost drivers? What are we looking for? I think there's a bit of a word missing there. What are we looking for in value-based options and solutions? I see everybody's reading it. I'll give you a second.
You know, I'll just give one. I think it's a great question, and I think you know, this is a testament, I would say, to the relationships that we have with our providers in New Hampshire, because I think we all have to work together on this. And you know, I think looking at things like the underlying cost of specialty drug, we know that's one of the #1 drivers of healthcare costs in the system right now, and there's no stopping those specialty drugs, which of course are great, right? Because these are life-saving treatments that we've never had before, but the reality is someone has to pay for it. And I think at Anthem, you know, one of the things we've done, and we've been so, I would say, fortunate to work with great hospital partners in looking at the cost of specialty drugs over the past few months to say, what can we do from a specialty drug cost perspective, and how can we bring those costs down? So I think there's those sort of looking at specific services and trends in the industry and getting ahead of it. And then I think there's all in. What are you doing from a complete comprehensive provider arrangement? And I think moving towards more value-based, you know, I think Tyler said earlier this morning, you know, we still live, you know, in predominantly fee-for-service. And I would suggest, at least for Anthem, you know, we are, you know, with our PCPs, for instance, in New Hampshire, we have value-based arrangements with 85% of the primary care providers in New Hampshire. And that includes both upside and downside risk sharing arrangements. So, you know, I agree there's a lot more work to go and to do there, but I think we have gone down the path. And I think what we have to recognize, we certainly do as carriers, is providers need a glide path. They need time to convert from that fee-for-service world over to that value-based world. And I would say they're doing it in large part. So I think at carriers and providers, we have to continue to partner and work together to get to that place where we can say that we really are getting at the underlying costs of healthcare.
Maria, thank you so much. We are over time, so we're going to have to stop it there, unfortunately. I did want to thank all of you, however, for your contributions today. This was a very enlightening conversation. I think we got into, in a very substantive way, a lot of different issues. So I appreciate it very, very much. And with that, Commissioner, I'll turn it back over to you. Commissioner, you may be on mute.
Mike, there we go. I knew I was on mute, but my computer wouldn't let me turn it off as we were changing the panel. First off, I want to thank you, DJ, for moderating that panel, and to Caitlin, Maria, and Kate for participating. It's always great to get the brain trust together. I think we're now on to a public comment period, closing remarks. We'll now accept public comments. Please use the raise hand function to be recognized. When you speak, please identify yourself and any organization you represent. All right, I'm not seeing any, DJ. I will give them another few seconds, and if we don't have any, we'll let everyone go off to lunch. All right, well, I think we did have a pretty open discussion today.
Commissioner, we did have one pop in here.
How are you, Lucy?
Hi, I didn't want to disappoint you by not asking a question. I just wanted to say how much we appreciate the information and the discussion and the roundtables. And there was a great conversation about primary care and primary care investment. And I'm just wondering the thoughts, Commissioner, as to where that conversation goes next in terms of looking at primary care investment and whether those conversations will continue.
I think they have to continue. I think having all the, having a variety of options for payment methodologies and kind of investment in outcome is critical. I think the fact that they had kind of responsive answers to your question the department's always willing to participate in those conversations or others. And I encourage you to keep reminding us to talk about it.
Thank you.
Not seeing any other public comments. I want to thank everybody for attending today. Our second year doing this hearing virtually has worked out well. We had more than 70 people participating at different points. We'll be accepting any additional written comments up until November 5th. Please send those comments by email to our communication director, Andrew Demers. His contact information is available in the chat box. All of you have his contact information because he sent you the link to get on here today. But if you need it, just let us know. And with that, I will close the hearing. Thanks, guys.